Hi everyone, it's Andrew here. Now, the reason I'm doing any of these videos in the first place is because I found that financial content online was not what I was looking for. A lot of it's pretty disgusting. So I felt that I would try to make topics that I'm interested in, and part of that is that I want to show my entire stock portfolio. That this transparency makes me very vulnerable to criticism, but responsible for what I have to say. Now, I'm not into crypto, NFTs, or penny mining stocks or anything like that. So here in my channel is my no bullshit approach to long-term investing and wealth. And if you are new here, well, welcome along. This is a pretty ugly quarter. Let's go see the damage. So here on the screen are the list of the stocks that I have investments in. So let me first talk about Nintendo in more detail. So I sold Nintendo for this major reason. I was hoping that Nintendo would have something to spend their big cash pile on by now. They still don't. Although this is conservative and makes them super safe, it just doesn't make them great capital allocators. See, Berkshire Hathaway, for example, they can run up these big cash balances as well, but they're waiting to pounce on good opportunities, like buying back their own stock or whatever Buffett thinks is a good deal. And they've been able to do this. Nintendo just haven't shown a track record of doing this. I thought they might have found something by now, but they haven't. Now, if Nintendo start to spend their cash pile into interesting, smart areas, then this becomes a lot more attractive. But right now, I think my money is better spent with a better capital allocator, and that is KPG. Now, Nintendo is still an amazing company and a company I will be watching really closely, but right now, I don't see a clear path to growth. KPG, I see a very clear path to growth, and that essentially is the difference. Yes, Nintendo have amazing assets and it probably is significantly undervalued, but I think over a long enough period of time, the better capital allocators will perform better. Now, besides KPG, I also bought Trulieve, and that has been crushed since making that bet, and that's fine. I'm not concerned. I think the decision I made was a good one, and if I can make good decisions over a long period of time, I will be rewarded. And just because the stock crumbles the second I buy it doesn't make it a bad decision. I think the stock is worth $40 a share and it's growing. They have already built a lot of their infrastructure, which puts them far ahead of competitors who have to build the new facilities to compete. Trulieve has spent yesterday's dollars to benefit them moving forward. Now, I think it's really important to not fall into the trap of thinking that this is a bad decision just because of the stock price. It might be a great decision and I'm just seeing a bad outcome right now. I understood the risks before I made this investment. I think all investing is about making bets, trying to get the odds in our favor as much as possible. And I'm just trying to make good decisions and then analyze results after a few years, maybe 3-5 years, or I might find something even better like KPG. So as you can see with the percentage change on Q1, some of these are down really dramatically. So we've got Skyworks is down 30%. Look, it's actually below the price that I originally paid for it. And that's the first time I've seen that since the few weeks after I actually bought it back in 2018. So look, that's come back a long way, and it's getting to a price now where the business is so much superior to where it was in 2018 that this is great buying right now. But anyway, let me move on. Berkshire Hathaway is down quite a lot, but I'm still up from where I bought that in the pandemic lows. We've got Dropbox has come back down quite a lot as well. Markel's down. Nintendo I sold. Then we've got Shinnikin, which is down from when I bought that about a year ago. I'm feeling very confident about that business still. I'm going to give that one a few more years to see how that one plays out. I think they are good capital allocators there at Shinnikin. OTC is up from where I bought it. It was cheap when I was buying it. It's come down a little as well. Redbubble is the one that I've been getting really punished on. So I bought that at $3.45, thinking it's probably fair. It's probably a reasonable deal, maybe fair price. Growth rates have come down quite a lot. I was not making a good decision at the time because I was not being conservative enough with my when I was doing my valuation. But still, 92 cents is so far undervalued that it's getting silly. If I have cash flow coming through, I'm going to have to really check on Redbubble. I don't particularly want to invest more because I've got quite a significant investment in that one already. But At these prices, it's getting to, I'm going to wait for their annual report to come out in August, get a read for that, get a feel for where they're going, and what their finances look like, and then see what the price is then and see whether I'm tempted or not. But I'll make that decision when I have more information. It's down 41% just in the quarter. It was down about 40% for the previous quarter. So down 73%. Oh, that's a pretty big loss there at the moment. If I sold, I'm not going to sell though. So it's really not a loss at all. Alibaba is about the same as where it was a quarter ago. Naspers and Prosus have just come up a little bit recently. There was a day where they went up about 20% or something. So I'm going to analyze that in a little bit more detail when I get... what happened was Naspers and Prosus... Naspers announced that they were going to potentially sell some of their 10-cent stake to buy back their own stock, which is an interesting play. It hasn't been executed yet, so I'm not jumping to conclusions or anything yet. I'm going to just give it a little bit more time and see what happens. The stock price has rallied significantly, both Naspers and Prosus, on that news. Not quite sure what I think of it yet. I'm really just going to wait until I get an annual report, or at least a quarterly report, to get a little bit more commentary around that idea. Judgement hasn't really moved much. ASOS and Trulieve. ASOS was just, I got smashed. It got cut in half nearly in one day. So I'm okay with this investment still. I think it's getting crazy price. It's just macro issues affecting ASOS at the moment. They're definitely dealing with some headwinds, with supply chain issues and inflation and all that type of stuff. Competition is getting fierce. Boohoo is down very significantly as well, so they're feeling the pinch a little. People are still buying from ASOS right now. It'll be interesting to see what their numbers come in for their Q2 numbers. So this screen shows all my investments again, but it also shows when I started tracking my portfolio's performance back in January 2020. I'm comparing that to the S&P 500 because at the time I was thinking, should I just index or should I actually try to find undervalued companies and invest, and will I get a superior return to the S&P 500? That was my goal. And at the moment, as you can see, I'm getting belted against the index. So, yep, I don't think any of these are going to zero. So sentiment will change eventually. I haven't invested anything that I'm not prepared to lose. But at the same time, I might rotate out of some of these positions if I find something that I really like that is far superior as a company, just like I did with Nintendo into KPG. So here in this pie chart is how each investment makes up a stake in my portfolio. I try to start investing with a little, say 3% investment or thereabouts, just like a warm-up position, after I've sat on that idea for a while, and I then try to add more to it if I think it's the best idea that I have. So some of the big positions I have, as you can see, is Alibaba. I was buying in, selling put options as the price was getting lower and lower. I started at like $220, I think. So that position got pretty big. Naspers and Prosus, I was selling put options as well, and that position got pretty big too. So as you can see, they're making up well over half my portfolio now. So that's fine. As they get bigger, they're going to take bigger pieces of my portfolio. That's fine. Hopefully some of my other businesses can grow as well. So the pie looks about the same split, yet the whole thing gets bigger. That would be nice. Now, I'm buying my investments through Interactive Brokers. There's a link in the description. It's important to trust your brokerage company. So many crypto exchanges have been falling apart recently, and look, I sleep well knowing Interactive Brokers is the best brokerage business available. I also have an e-magazine that I put out each month. This includes the watch list of my stocks and the intrinsic values of these businesses. There's a link in the description to that as well. Now, the important message that I think from this video is that we're all going to make decisions, and we're trying to make the best decisions we can. Don't think the decision is a good or a bad one based on what happens to the stock price in the short term. Just like me buying Trulieve and it falling 43% in a few months, doesn't make it necessarily a bad decision. Let's see where that ends up in 5 years. Just like a company like Judgement, which I bought and then it's immediately gone up, I can't think that I've made a really good decision there because, again, that's just short-term fluctuations of the market. Let's see where this thing is in 5 years' time. Thinking your decision is good or bad based on what happens to the results in gambling, in the gambling world, they call that resulting, and that's actually a mental bias and a flaw that we have in our thinking. So what we're trying to do is make really good decisions, and the short-term fluctuations in the market shouldn't affect how we think of that decision. That's what I'm trying to get at. Now, I think criticism is really important, and it's actually greatly appreciated on any of these investments. I welcome it, so please leave a comment if you do have some criticism or support, whatever. I hope you've enjoyed the transparency. Give it a thumbs up if you did like it, and I'll see you in the next video.